What's going on, everybody? Welcome to Wisdom Wednesday. Today I'm going to take a few minutes to answer a question I got recently. It might be something that you've been thinking about and wanted to know and didn't ask. So sometimes these questions can benefit our group as a whole. All right, here's the question I received via email from someone who was looking to purchase a home. He's getting second opinion. My fiance does not have a credit score. I have a credit score of a 680. Are we able to get financing? We were told we got an approved eligible through DU. What is that anyway? What does that really mean? So before I answer this question, everybody, I'm Clarence Ferguson with Geneva Financial. Welcome to my channel. Make sure you hit that like button and share the video with anyone you think it would help. Now, this is a common scenario that pops up. A lot of times people just don't have regular credit. They never did anything on credit and they don't have a score. But let's start with approved eligible means based on the application submitted, you appear to meet the minimum guidelines for the mortgage you're applying for. When an application is referred to manual underwriting, the findings with the automated underwriting system would say refer eligible, meaning it's going to have a manual underwrite from an actual person. DU stands for desktop underwriting and LP stands for loan prospector. I use both DU and LP to determine whether it meets Fannie Mae or Freddie Mac's eligibility requirements, which means DU or LP approval is critical towards getting the best mortgage. Now, to your question, Fannie or Freddie does not have a minimum number of trade lines, credit debts, or age of accounts required for loans processed through their automatic underwriting system. So if you get an approved eligible, we can work with that, okay? DU loans case file states that if one borrower has a credit score and another borrower has a credit score or doesn't have a credit score, then at least one of you will have to go through DU through the following requirements, okay? This is super important. Your property must be one unit. It must be your principal residence, and all of the borrowers on the application must occupy the property. The transaction must be a purchase or a limited cash out refinance. The loan amount must meet the general loan limits. If you have a high balance mortgage, that's not going to fly if you only have one credit score. There also might be some reserves required based on what the DU findings come back as. If the borrower with a credit score is contributing more than 50% of the qualifying income, we are not required to document non-traditional credit. Now, if the borrower with the credit score is contributing 50% or less of the qualifying income, then we're going to document some non-traditional credit history for each of the borrowers without a credit score. So we see this sometimes with brothers and sisters who get a loan together. So as I state every week, there are ways to get things done with the guidelines set for us. Do all borrowers need a credit score to buy a home? The answer is no. There are many ways to demonstrate credit payment history. For example, your utility bills, rent, cell phone bills, and now you're seeing even streaming services can be used to document your payment or credit history. Bottom line is, don't let lack of credit score stop you from buying your dream home. Let's talk and plan your road to home ownership. And don't forget, guys, if you like this video, hit the like button and share with a friend. And if you're not a subscriber, hit that gray bell, subscribe, and you'll get new content every week. I will see you guys soon.